Hey everybody, it's Pete. Good morning. Welcome to a new episode of Stocks for Breakfast. What we're going to talk about today is the culmination of earnings season or kicking off earnings season. We get a ton of questions about how do you trade earnings and do you trade penny stocks? So first off, I want to say I don't trade penny stocks. I don't have any interest in trading penny stocks. We often, there's a very exciting part of where you could find a stock that's $1 that goes to 10 or even more, the way some of these stocks have been trading recently, but I don't do that. I trade the market leaders. I look for the strongest sectors, then the industry groups within those sectors, and then I find the leaders in those sectors. But then you break it down even further to what we're experiencing right now, which is earnings season is kicking off and kind of like really now out of the chute, right? What I'm going to show you right now is a time-tested way of looking at stocks that are about to report earnings and then what to expect after earnings. Now, I'm very well known for I don't trade earnings going into it. So I want to be clear about that. If I have a head start on a trade and a stock is moving up prior to the earnings and I'm on a profitable trade, I'll hold that through earnings because my thought process is very simple. One of two things is going to happen, and I'll sign up for this the rest of my life. If I buy here and a stock rallies into earnings, more often than not, you're going to get one of two scenarios. It's the earnings are going to be disappointing. The guidance is going to be disappointing going forward, and the stock pulls back. I take a flat on the trade, worst case scenario. And trading language for a flat means you got in and got out at the same price, or a flat means you don't have any open positions. So if earnings disappoint, it pulls back, I take a flat on the trade, and that's if I have a head start on the trade. If, however, the earnings come out and I already have a head start on the trade and the earnings are good, more often than not, those next 2 days, I'll be looking to sell into earnings. Even today, for example, we'll take a look at Apple, which has earnings today, and Microsoft, which reported yesterday. So generally speaking, when a stock is going into reporting their earnings, if it's kind of going sideways, it can be challenging to, and when I say sideways, I mean the prior couple of weeks, it can be challenging to anticipate what that stock is going to do. So what I generally do in that situation is I let the market tip its hand, then I hop on board. Everything we do is about finding the smart money and then just piggybacking what they're doing, right? So if it's sideways, the prior 2 weeks heading into earnings, especially the last 5 to 7 trading days, I kind of take a step back. I'm like, okay, you tell me where you're going, and then I'll hop onto that trade. And more often than not, you can trade that in the direction for the whole next quarter. You can get a really good 3 months worth of trading out of it, right? What if the stock is selling into earnings? That's really the big thing. Then you got to dig a little bit deeper into year over year sales, year over year EPS, right? And especially the last couple of quarters of EPS, right? You know that. I'm not really inventing anything there, right? However, you want to make sure that they're going in the right direction. If a stock that's strong already has existing order flow and starts to sell off prior to earnings, it's that very classic cliche, buy the rumor, sell the news. So in this case, if the stock already has existing order flow and starts to trade down into earnings for the last 5 to 7 days, especially the last week, those are usually the ones that catch people by surprise. And we mentioned this recently in a video that you're actually trading the longer term order flow. You're trading the longer term numbers coming into that, not that last 5 days. But typically when you do see that kind of rolling over, that's when the buyers come back in after earnings and you kind of see a surge. The other side of that equation is when a stock already has bullish order flow and has a rally into earnings. So again, 5 to 7 to 10 trading days prior to the earnings that come out. So what generally happens is that earning is priced in. Again, smart money, right? Deeper pockets. That earning is priced in. The stock has a rally for maybe a day or two, maybe even just that morning. It typically rolls over for about another week. And then you actually have the new bullish leg into that. So I'm going to show you 3 stocks. I'm going to take a look at that. If you find these videos helpful, definitely click down and like the channel, subscribe actually. And if you have any comments about this lesson in particular, it would be kind of cool to leave a comment. Let me know. We'll have a discussion about it. So we're going to look at 3 stocks right now to really bring this point home. So PayPal in the longer term picture on the monthly chart, obviously in a longer term bullish run. So here you can see the price action for the prior 2 weeks heading into this earnings, and then you can see the price action after earnings. And like I said, Once that earnings comes out, it's established. And if that stock already has bullish order flow, you can pretty much trade that direction right into the next earnings report. So that's what's kind of cool about this strategy, if you will. You're letting the market tell you from one quarter to the next, okay, let's just position trade this over the next quarter. I want to talk about Goldman Sachs, and you can start to see a pattern developing here. So here's Goldman Sachs, right? And you can see the rally, and especially the rally accelerating into what was very good earnings. And now you can see the pullback. So this is really what I'm looking for here. It already tipped its hand, profit taking, pullback, and now yesterday actually gave us an opportunity to look for a new swing trade today. Microsoft is one that's actually now on the opposite side of that, where order flow longer term is clearly bullish, right? We're actually trading into new all-time highs. And the price action heading into yesterday's earnings, where you can see the stock is now up $8 and trading up into $240. The prior 1, 2, 3, 4, 5, 6, and today would be the 7th day of the stock being well bid. After earnings, we would expect this open higher, push a little bit higher, see some profit taking over the next couple of days, hold this 226 level, and then look for the next push higher. So what I'd like to do is I'd like to challenge you. As earnings season unfolds, if you have any questions or some ideas you'd like to discuss over this particular strategy, leave comments in the video, and I'd be more than happy to go back and forth with you in a really good, healthy conversation about what we expect to have happen next, reading the order flow, reading the tape, and that kind of stuff. It could be kind of fun to do together. So definitely subscribe to the channel. I'd appreciate that. That would be awesome. And let's see how these unfold. That would be kind of cool to watch together too. So have a great day, everyone.